Welcome, welcome everybody. I am Carol Mirko and I'm just going to switch to speaker view. So I'm Carol Mirko and this is Netcapital Advisors webinar series on women in private equity. This month we're focusing on financial literacy because it is actually Financial Literacy Month. So we put together this fantastic panel of women founders, investors together who we know will provide wisdom from the trenches. Before I introduce you to these 6 dynamic women, I want to just take a moment and introduce you to myself. So I'm the Chief Marketing Officer at Netcapital Advisors and Netcapital Inc. We have created a digital private equity ecosystem that is centered around the democratization of the private equity markets. What this means is that now non-accredited investors can invest in private equity through an SEC registered digital portal. And this was actually made possible when the Jobs Act was passed in 2012, which was the purpose of which was to create opportunities for job creation by easing up the SEC regulations to encourage small business funding. So, please check us out. We're at netcapital.com for our current list of companies that are raising money on the platform, and also about actually the entire ecosystem, which includes Netcapital Advisors. And, ironically, here we are raising money for private equity, but we're actually a publicly traded company. So you could, look at how we're doing, there as well under our ticker symbol, NCPL. So now back to women. All right. Netcapital Inc. C-suite is all women. Our CEO, Cecilia Link, who's here, will be joining us for closing remarks, and our CFO and friend and previous coworker, Corinne Kreisler, who recruited me, is our CFO. So the 3 of us are CMO, CEO, CFO. It's just such a delight to work with 3 women, building, the mission and values of this company. So we are here to promote and support women in private equity. My belief is we are stronger together. I also know that when we help each other, we shift the consciousness of how to get things done, right? And but moreover, and most of you know me, and everybody in the audience, you will learn to know that I believe that that love will and is saving the world. So we just need to come together and shift the energy around how we do business and how we work. So I'm going to just shift. I don't know what the view is, but I'm going to go back to gallery because I want to start with introducing everybody. I'm going to share their bios. And so when I'm sharing your bio, can you just obviously everybody can read your name too, but just, wave. Allison Hemming, she is, I love her title, Top Gun at the Hired Guns Digital Agency. The Hired Guns has been selected as an Inc. 5,000 fastest growing companies in America and was profiled in Crain's New York for their disruptive, we love that word, approach to recruiting digital talent. Allison is also an author of Work It, which is a guide to finding work in any economy. So thank you, Allison, and we're going to look forward to hearing what you have to say. Our next panelist is Burr. She's the president and CCO of Carrot, which is a digital health company. She was named one of Silicon Valley's Women of Influence and was featured in the Global Corporate Venturing Power List, go busy, placing her among the top 100 corporate venture leaders in the world. She also authored From Ideas to Impact, a playbook on driving transformation in a global enterprise. Welcome, Busy. Thank you so much for being you and being here. Christina Novicki, partner at Upstream Capital. She has been active in the private equity industry for over 20 years and has held senior level positions in independent and institutionally backed private equity funds. As a founder of Upstream Capital, Christina Novicki actively works with portfolio companies to foster growth organically and through add-on acquisitions and consolidation strategies. Can't wait to dive in with Chris. I call her Christina Chrissy, so just warning you. Diane deCordova, founder and COO of Parsec Media and founder and COO of Adelaide. Adelaide is a SaaS platform for effective digital advertising, really important these days. She previously founded Parsec Media, a marketplace for advertising sold on attention metrics. And prior to that, she spent 2 years with Google as a brand lab lead and video sales specialist lead, and worked with Yahoo as a director of global alliances. And that's just the tip of the iceberg of what Diane has done. But, you know, we had to shrink it down. So Marni Schapiro, hello, Chief Revenue Officer of IFundWomen. And I got to say, just love the mission of IFundWomen, which is crowdfunding, right? Not like we're equity crowdfunding at Netcapital. IFundWomen is crowdfunding more in the Kickstarter realm. So it's the go-to funding marketplace for women-owned businesses and people who want to support them. Prior to IFundWomen, Marni was the head of North America advertising sales at now defunct streaming platform Quibi. She also spent nearly a decade at Google, where among other roles, she played a part in scaling YouTube into a multi-billion-dollar platform. Marni, thank you like so much for being part of this panel. And Yasmin, you're here, yay! Yasmin, co-founder and general partner of Visible Hands. Yasmin, let's see, through a Visual First Fellowship program, Visible Hands provides company building services and investments of up to $200,000 to underrepresented talent. Thank you for doing that, Yasmin. Previously, she was the head of growth and strategy for New England business development at Brown Advisory, where she streamlined the addition of $980 million in assets under management. Yasmin has been named a top 100 influential Massachusetts Latino and a name you should know by Alliance for Business Business Leadership, and a top 25 emerging leader of color by Get Connected. Now, if everybody, you know, in the audience of attendees doesn't see this as like an amazing group of women, I'm humbled. I'm just so happy to have you here. So so I am going to start the questioning around this concept of tips and tools. I'm going to go in reverse alphabetical order. So I started with Yasmin, with Allison, but now I'm gonna start the questioning with Yasmin. So Visible Hands, right, invests in entrepreneurs pre-idea and pre-co-founder. So when you support founders so early in their development, how do you advise them on setting up for success in terms of financial literacy and later rounds of funding?
Well, it's great to be with you all. I hope you will forgive my tardiness. I was stuck on an LP call with one of my largest investors. And at some point I said, please, I apologize. You know, I really need to go. So I apologize for that. But thank you for the honor of being amongst all of these incredible women. So, you know, we are very early stage. Right at day zero. And one way that we try to set founders up for success is to incorporate them as C Corp so that they qualify for a qualified small business stock, or QSBS. And that will allow them, when they get all the way upstream at their liquidity event, to have a tax benefit. So that's one of the things that we do. The other thing is, there was an old piece of advice which encouraged founders to, you know, be really scrappy and max out credit cards. And one thing that I tell founders is that you could be due diligence later upstream. We will do a background check. We will do a credit check. Because if I hand you off to a seed investor, and they find out that, you know, you have a really low credit score, it could limit the flexibility on access to real estate, then they're going to look at me. So you have to make sure that you think about credit card utilization. Can really affect your credit score. As most people know, it's not just about paying your uh, debtors on time. It really is about utilization. So we try to talk to founders also about the reality of the earliest stage of company building, which is to understand the company that you're building, what is the cash flow and the business model really truly like? Will it be cash flow negative for a certain period of time? And whatever period of time you think that is, like, extend that by a long runway. And so be prepared for that from a family structure, and be realistic about what that's going to mean from your lifestyle, because what it takes to fund your lifestyle isn't going to stop because you're company building. So really being honest about the business model of the business that you're creating and what the cash flow will be like. And then I'll say the last tip is and my background, as you heard, is in investment. So I kind of oddly have like a portfolio perspective on some of this, which is, if you're creating a business that has certain sector exposures, think about in your investment bucket what those exposures are, and think about if there was a downturn in the economy, you know, how exposed you'll be. So you may want to add some diversification outside of whatever sector you're in, which can be hard because you feel like you have an insider's perspective on that sector. And then I know, like, for example, you know, Bitcoin founders who outside of their company are like 100% invested in Bitcoin because you have that conviction level. But, you know, there's some exposure there to be honest about. So those are just some of the ways in which we encourage founders to think more holistically about their own personal finance.
That's great advice. And, you know, I was, when we spoke, Yasmin, I had mentioned that when I was doing one of my companies that, you know, back in the, you know, Inc. magazine and Entrepreneur magazine back in like the 80s and 90s, we're always promoting maxing out your credit cards. So I certainly was like, oh, that's a great idea. Not, it was just a disaster. So so I think putting that up front, you know, is really important. And I commend you for both your advice and what you're doing.
Carol, sorry, if
So
I can just cut in here. If you
yes,
could also switch to speaker mode when you have a chance, that would be great.
I thought I did. It says speaker on my
Okay, great, perfect. Just wanted to make sure.
okay, thank you. Okay, so hopefully, can you see me? Somebody left.
Yes,
Okay, okay.
all good.
Okay, excellent. Thank you. It's like, okay, so maybe I wouldn't get an A+ in webinar management, but anyhow, we'll move on. Yasmin, great tips. So actually, what I'd like to do, I'm gonna change my mind. I'd like to move to busy, because busy, you know, you've had similar perspectives, right? You've been an investor, and you've also been a founder, and now you're president of a startup. So, you know, can you add on to kind of Yasmin's perspective and you know, add, you know, that combination of I think a long view, right, into this whole conversation.
I love what Yasmin was saying about business model, because I think that ends up being this really amorphous thing that people find a little bit confounding. But it's in part because, particularly when you're starting out, you just don't know. You don't know. And you kind of want everyone to just be like, I don't know. I just want to. But I think building that business model is one of the most important disciplines that you have, not because you think it's going to be true, but because it forces you to put your assumptions down on paper, like what you actually think might happen. And that's the first step of your testing and learning into your whole experience, because you'll start to see, well, I think I'm going to get 5 new clients next year, and I think they're going to do an average of, whatever in revenue. And here's how much I think it's going to cost me to do that. So all of that, I think, putting it down on paper, even though it's a little bit nerve-wracking when you're a founder to do that, having been a founder, it's a little nerve-wracking because you really don't know. It's just a really important discipline, because the investors, they're not going to look at it as truth. All the investors on the table on this panel are like, yeah, like we know that those models are not gospel truth. We also know that they're probably super optimistic. But we want to have the conversation about the assumptions that you're making, about the assumptions about the market, the assumptions about how you're going to perform, the assumptions about what you think you're going to be able to charge, the assumptions about the kind of volume you're going to get, what it's going to cost you to deliver. And really being able to have those conversations both with yourself and with your investors is a really important step into both developing the relationship, but also giving yourself a view on what kinds of things you're going to need to do, both to build your business, but also mitigate the risk. You'll start to see what things you're making assumptions about that like make you kind of go, oh, I don't know, that one's a risky one. So what kinds of things are you going to do to mitigate against all those uncertainties? So venture investing is really just about managing uncertainty. It's about managing risk and managing uncertainty, both as a founder and as an investor. And so that business model that you create it's kind of your vision and your execution and operations all on paper. And that's like one of the most important things to have, to be able to build conversations both with yourself around your assumptions and with investors.
That's a really fantastic advice, because I do think putting pen to paper is really powerful, right? It makes something more real, and potentially actionable. But I think that there's so many people around now that can mentor folks as well, right? That can help poke the holes in, and show you.
Yeah. It's okay not to know. It's okay to guess, as long as you're kind of basing your guess on something. And then knowing that as you go forward, you're going to keep learning more, and you're going to hone those assumptions as best you can over time.
Thing if I could, it's Christina.
All right.
That I'd add there that I really like about that busy is it forces, what we look at as investors and for owner operators is it forces you to take a bottoms up approach to the model, as opposed to simply a top down, revenue growth or CAGR assumption. And when you take a bottoms up approach, it sure does make you get granular, which is really important.
Right. It shines light on where the risk is, and again, that what your assumptions are, and then it forces to mitigate, because you can't really mitigate against, well, I think I'm going to do 500,000 this year, then $1 million next year. Like, you can't mitigate against that, but you can mitigate against the components of where that's coming from. So.
Yeah, no, I think that's it's really, really important for folks to hear, including, people who are investing in companies on the Netcapital platform or and now I can segue into IFundWomen and talk to Marni a little bit, like, people who are, women that are coming to IFundWomen to, get their like first round of capital that isn't maybe friends and family, to get them started, right? And to think about what Busy just said, can actually like set them up to be even more successful. So, Marni, what do you think about what tips and tools, because I know IFundWomen provides like a lot of education.
Yeah, thank you so much. And it's so wonderful to be on this panel and see a couple of familiar faces, Yasmin as well. So real quick, just to make sure that everybody knows about IFundWomen. Like you said, it is a two-sided funding marketplace for women to own businesses and the people that want to fund them and support them through not only capital, but through coaching and through the very necessary connections that women can have with each other and with the people who care about their businesses. So we work with women entrepreneurs from all categories. Name a category of business, we've got them, and we work with them from idea to exit. So it's really important that when we think about, I guess, how we're saying tips and tools, rather than thinking about it as tips and tools, we actually have a pretty tried and true method. We call it the IFundWomen method. It's something we've created over 5 years of business, and it allows our members to really dig into those stages of business and the needs that they have. And what that falls into is, like I said, coaching, capital, and connections. So from a capital perspective, I love what has already been said, because what we think about at IFundWomen is, how do you create interest and cementing your idea for your business without going into debt on your own, right? So what we know is that women will often put themselves into debt before they ask for money. And we want to help change that narrative, right? We want to give them the tools so that they know that they can do something like crowdfund to prove out their business to begin with, before they start putting themselves into debt and having credit card issues and all of that. We want them to try to find ways to raise that money in a debt-free manner. So that's where the capital comes in. From a coaching perspective, what we're all saying is, don't go at it alone. There's no way that a woman entrepreneur, especially if they're in that idea stage, if they haven't done this before, if they don't have access to amazing investors in that VC community, how are they supposed to know what to do? And these women are brilliant, but they need the coaching, they need the help to educate themselves and move them forward. And we've created an unbelievable ed tech platform so that women can come to us regardless of the topic and learn what they need to learn, one-on-one with coaches, and then through a ton of webinars and events that we have. And then the last part of that is community. And much like what we're doing right now, women should be able to lean on each other, use community to go through it together, right? The issues that these women entrepreneurs are facing are not theirs alone. And just like with coaching, how we wouldn't want women to go and figure out all of these questions by themselves, we want to create community so that these conversations happen more freely. They happen easier. They know where to get the information. They know that, I met a woman named Busy, and this is what she can tell you about and teach you about. Without that community, there's a lot of silos and a lot of limitations in terms of women finding the information that they need. So through the course of our 5 years so far at IFundWomen, and through the IFundWomen method, which again encompasses capital, coaching, and connection, we've actually helped women raise over $80 million. We've created thousands of jobs through it, and we're just getting started. So it's pretty amazing to think about the privilege that we have of building really the largest connected community of women business owners in the world, and making sure that they have the tools to propel them further.
That's incredible. And, kudos to you. And I think I love the 3 C's, like coaching, capital, and community, and, / connection. They're so important, but, and each of those, it's like that triangle, like you need all 3 sides, right? It's just like, it's really, so kudos to IFundWomen for creating this, really fantastic platform. Marni, you obviously like came up through like, a larger organization across verticals. Do you see the do you think that there are things that are different across verticals? I mean, because IFundWomen must have lots of different industries. Are you seeing, how does that play into?
Yeah, that's a great question. I would say that at the bottom line, end of the day, revenue is your best fundraising solution, right? Being able to make money is the best thing that you can do before you start asking a lot of people to become invested in your company and giving away parts of it, right? So in my view, and for IFundWomen, it is category agnostic. And we have found that teaching women to crowdfund, in this case, in our case, to get debt-free capital is a great way to prove out their business before they start looking for larger investors, right? And before they start thinking about, oh, how am I going to split up my cap table and what am I willing to give up and all of that. First, have your business basically proven out, because people are willing to give you their money and they like your product. It is an amazing way for women to also learn that going after investment is also a sales pitch, right? And so when you're crowdfunding, you got to be able to sell. You got to be able to drive people down a funnel to support your business. And one day that's probably going to end up being at your feet, right? At a big VC or large investors or financial institutions. But when you're starting, or when you're trying to prove out a business need or a market fit, we just think, listen, here are some tools, right? Crowdfund, get that debt-free capital, get some coaching so that you know how to crowdfund the best, or how to write your business plan, or how to find a co-founder, and then use that community to lean on and learn from even more.
Great, great. Well, I'm going to segue from you to Diane, because Diane is now the in fundraising for Adelaide. So, and a serial entrepreneur. So Diane, what do you think about, this whole process, everything that has been said, what Busy said, what Yasmin said, what Marni has said, and how that feeds into, what you're experiencing right now while you're fundraising? Diane?
Mute button. Okay. So nobody even had to tell me I was on mute. There you go. So I think they hit the nail on the head with the business model. As a former investment banker, which is really how I started my career, I came out of building discounted cash flow models and other things, and but thinking about new business models was not really in the suite of things that I did. And most of my experience with startups was, in business development and sales and on a leadership team, but not really necessarily building the models. They were sort of there. But in the last 7 years with Parsec and now with Adelaide, I was the one building that business model. And I tell you, it's like herding cats, getting everyone to agree to the components that go into that and the variables that you need to look at. And of course, there is a sort of top-down model where you can say, well, our revenues are going to go from 0 to 10 million in 2 years. And then, okay, well, and what are the costs associated with that? And what kind of staffing do you need? And what kind of marketing do you need? And then what are the variables that you play with? And what knobs do you dial to make it all work? And of course, in that is the capital factor and what you need to raise to enable that. And, I think, I'm in my 7th startup now. So, but the rule of thumb has always sort of been, or it actually is for me now, it's like raise just about as much as you need, maybe a little bit more. Like with Parsec, we raised about 4 million, been in business for like 6 years. We didn't actually need a lot. We just simply managed to a point of profitability before each new incremental raise, so that we weren't beholden to, say, a big venture capitalist that might require that we spend a lot of money and grow faster than we needed to. We sort of grew as fast as we could plan and just make real. So I think the model helped us gauge that, when the needs would come, how far in advance we needed to start raising. And I think, one of my very shrewd early investors basically just said the key to a successful startup is just don't run out of money. So I took that to heart. And so it's, you see the pool dwindling and you go, I got to get back on the road show kind of train. Don't know if that answered your question, but.
Oh, no, it can totally. I mean, it was a beautiful segue because, you happen to be, but let me ask some other questions. So what are the hardest questions you get when you're out fundraising? Like what's the focus, right? Like,
well, often the focus is, I think my understanding what most investors are looking for is a big idea, something ideally it's transformative, but at least it has a big market. So what is the potential market? What is the addressable market a year after? So is this a big opportunity I should care about? And then is this the right team to execute it? And if you check those boxes, and if you've been an entrepreneur for a while, you sort of, you know how to put that team together. But then it really becomes into, the projections in the business and how you're going to go about it. What network do you have to draw on in terms of business partnerships, in terms of sales? In the case of our current business, initially it was media sales into agencies and so forth. So where do those come from, and what are the levers, and how do you build a moat? So if you really are first to market, and we have been first to market in getting advertisers to pay for attention as opposed to paying for impressions, sometimes you have to address the question of inertia in a marketplace where people are just entrenched in current behavior. And so how are you going to get them to move into a new space? And that's almost always where I've been in my career, is like just ahead of the curve. So I like doing that. It's kind of a challenge, but that's often what we get.
That's well, and thank you and kudos for, for being, ahead of the curve. And, without folks like yourself, Diane, like, I mean, like we wouldn't be evolving and moving ahead, and but I think it's great that it's not just the financial stuff. It's so much more, right? It's although I do love the idea that don't run don't run out of money. That's like,
you can't do anything if you don't have the capital. That is true.
So the best tip that we've learned is don't run out of money. And so I want to now talk to Chrissy, because Chrissy's she's a partner of private equity fund, and so Chrissy's up the curve a little bit, right? She's investing beyond the a startup. And so Chrissy, what how did you come up with your criteria, and how can you help somebody that's thinking about starting a business, like think 5 years ahead, like to where they may want to come to somebody like you and have you kind of take a piece of their company and help bring them to the next level?
I think it's interesting. The way in which we came up with our criteria has a lot to do with what was just discussed in terms of addressable market. So when you think about sort of the continuum and moving from venture to private equity, and where we focus, we call the micro end of the lower middle market, which is really, we think, the last of the inefficient pocket within private equity. So as you move upstream, it's a lot about AUM, and there's often at its worst, a misalignment between investors, LPs and GPs. For us, we spend a lot of time in the $1 to $5 million EBITDA market. And these are small companies, probably a little bit different, in terms of, positioning the sorts of businesses on the venture side. My guess is, those go to the big strategics and those go public and whatnot. But to the extent you take that slow and steady approach where you're managing profitability and you're not taking big venture money and you're maybe grub staking it with your own capital or with family and friends and maybe some small family offices, you sort of get to this $800 million EBITDA point. And we're usually helping folks when they've reached, we're often the first truly institutional capital. And they've either reached their complexity ceiling, where they realize, I've gotten to a point where I actually am strategically lonely and I would like somebody else around the table. I'd like to build a board. I'd like to kick around some ideas. Maybe I have a CFO, maybe it's just probably more likely a controller. Maybe I have an interesting VP of sales, but I'm grinding it out every day and I don't have somebody that can allow me to sort of pull back and look at the bigger picture of, a lot of the companies we look at are owner operator businesses where they're pulling a lot of cash out of the business, but they're not reinvesting that cash in growth, or they're not prepared to put their own additional capital in to make an acquisition. And so they plot along pretty well, and they grow at 5 to 8 to 10% or even 15% a year. But they're not trying to do anything, which I think someone used the word transformative. And so they need, another, intellectual resource, capital resource to try to do something that's more magnifying. So what we do is we go in and we have conversations around things like, pretty basic stuff for us, but stuff that you might not necessarily think of as a small owner operator, which is, okay, let's look at what we do. Let's figure out, what should we stop? What should we start? And what should we continue? What are we doing that's hurting the company? What are we doing that we haven't yet embarked on? And what should we continue that's really kind of core to what we're good at? And a lot of the companies that we're attracted to are large installed bases, recurring revenue, high gross profit margins. And we help companies, do things with measuring, monitoring, holding themselves accountable with KPIs and all sorts of things like the things we've talked about in terms of processes and data and building models and 100-day plans and things of that nature to really, that exercise of putting pen to paper that we all learned in all of our great educations. You think you've formulated an idea and then you put together this 100-day plan, and it really helps kind of you find your ballast point as an investor and as an owner operator.
Mm-hmm. Great. That's I think that having your perspective in this webinar was really important because, I think, we're kind of like from, an idea, right, to like IFundWomen, and then, Busy's perspective as an investor and a founder, and Diane as a serial entrepreneur, like, you're like, out there and on the curve, like, looking at, these kind of slow and steady companies, and, and sometimes you don't have to be the unicorn to be super successful, right? Like, so, and I think that's just, I wanted to just get that point out there. And like, and when somebody, like, when a private equity, I guess you're the micro end private equity style firm might be interested in your company, and you're a woman in private equity. So thank you for that perspective. Well, we're going to move to Allison. She's going to be our closer. And so Allie, I have known you for a fairly long time. When I was starting a company, and it was just, you were such an amazing cheerleader, but you have like a unique perspective here because you're a founder, right? You started this disruptive digital talent agency, and you're also somebody that's, looking at, what are you worth as an employee, right? And then, what's your value, right? Like, so even so when you're fundraising, there's everything that we've talked about, like the business plan, the modeling, but there's the X factor, right? Like who you are, who you show up as, like what, what's your personal brand. And all right, Allison, I'm just gonna be quiet and let you run.
Actually, I think weirdly, I wasn't sure how we were going to end up with me as the NCAP, but it's really interesting because you go from idea to, getting your first round, to getting your coaching from a place like IFundWomen, to, your 1 to 5 million, you're going to work with Christina. So guess what? When you get your funding is when you call my company the Hired Guns, because we build teams, right? And and it's interesting because what's fun about this conversation is I'm both entrepreneur, but I also help entrepreneurs and business leaders build and grow their companies through great teams. And what's fascinating about sort of the time we're in is, one thing that I've seen over and over and over again, regardless of the era we're in, and I've been through many recessions, and hopefully right now we're in an acceleration mode, but you need to have, timing matters. The technology that's available matters, but the team matters, right? Like, and getting that right is so essential to your growth. Now, as you're thinking about your team, right? As my company, we work with startups, we work with emerging growth, and we work with companies that are driving transformation. So that Fortune 500 company, and sort of the innovation and transformation is two sides of the same coin. On the innovation side, you're inventing something that's never existed and you're sort of getting people behind your big idea. In transformation, it's a lot of a ton of bringing in new ideas, but convincing the organization to drive in a new way. That's for when you're super, super big. But what I've noticed in terms of people who are building their executive teams from their first person to the rest of the organization, and particularly with women, is they want to give the thing that's sexiest and that they're best at away to somebody else. And I always encourage people, don't do that. You want to be able, if you start giving away the thing that you're best at first, because as you're growing as a company, a lot of times you may end up having 2, 3 jobs. And as you accelerate in your growth, you start, you then eventually become the CEO and you have your team. But if you end up with the job of every day running your company, and that second job or your third job is the thing that you like least, you've done it wrong. You want to hire that sooner, and then begin to, when you get your, in the last job you give away is the thing that you love the most. So just keep that in mind. Another thing, and this was something, I've been in business for 21 years. I started the company in 2000 with the idea that I had never been in recruiting, but I was a frustrated hiring manager and the whole process didn't work for me. And so I thought, I don't know much, but I know digital and technology talent will be important. So I drew a big circle around it. And we started right out of the gate building teams. And through that, and then we did that right. And and then the economy shifted. And guess what we had to do? We had to pivot. So we bolted on staffing, and our clients stayed with us. And then they ended up hiring our people one-off. And then they're like, you guys are pretty good at that. We've converted all of your folks into full-timers and they're building our teams. Can you do full-time placement? And we added that service line on. So again, back to some of the stuff that Marni and Diane and Busy were saying is, we all through it though, we were figuring out the human capital equation of how do we get great people together. And so, and through all of this, we have consistently built an amazing group of individuals who love working with us as an organization, our community, right? So we help coach, to your point, Marni. We have events, we bring people together to, to weave the interstitials between their own work and where they're driving forward. And that includes working very closely with our clients. So, so in addition to, to all of that, I think the other piece of advice, because now it's cut forward, we're 21 years, we're having weirdly our best year ever. How did this happen? We've never taken in private equity, not that we haven't danced with that before, but it's really interesting to hear sort of the journey. We've always been self-funded. But we do work with many companies that have raised capital and need to figure out how to hire the right teams at the right times. And one piece of additional advice, this is a little bit off of the journey, but I think it's a really important one. It's when did my company really start making money? And it comes back to focus. Right. So to what Christina was saying is, you want to get rid of that periphery. What do you do best in the world? And guess when I figured that out? When I had the courage to go to an industry conference to meet with, to be with the rest of my competitors. I had never thought of myself as a recruiting firm. We were trying to disrupt recruiting. So I'd ignored this grouping of individuals who were so knowledgeable, and I kind of like plugged at it alone for so long, too long, right? And so what you want to do is don't be afraid to look inside your industry for best practices and other executives who will help you out along the way. The most magical thing happened when I went to our first staffing industry event was all of these amazing women who built their companies from scratch, just sort of basically, put their hand on my shoulder and said, come on, you got this. And amazingly, then when I started looking at how the industry made money for real, as opposed to me trying to figure out how to create something that was ish, as opposed to how the rest of the business worked, suddenly everything started to work really great. So, so don't be afraid to look to your competitors, and then also look at how you're managing your brand through it all. Because guess what? When your talent, the individuals, especially your first team, starts to come in, you think you're hiring them, they're actually hiring you. And in the moment we are in right now, right? It's crazy. It's like, it feels very 1998, right? Like it is, every candidate we have right now has a counter offer from so they're getting an offer from me, they're getting an offer from an opportunity that they found on their own and sourced on their own, and their current company is also presenting a counter offer. So what you want to be thinking about is, when you're recruiting, is starting with that huge confidence about why they should quit a job they love and a boss that adores them, and they may even love their boss, to still come and join you on your journey, right? If you can answer that, and it is amazing to me how few companies can answer that question, right? And if you can't answer that yourself and make sure that all of your leaders, as you bring them in, can answer that question, you're not ready to hire great people, right? Who will be transformative, who will take work off of your plate, who will grow your company. So there's that. And then it's also being really confident to talk about two things. One, what does success look like in year one for every individual you hire on? How will their job and how will their presence impact the company from day one? And what's not working? Now, many executives have a hard time talking about the things that are a little bit ugly. But you know what? When you can do that, and you have the confidence in your hiring and the confidence of being able to sort of show with empathy where your pain points are, guess what? You begin to be able to recruit amazing individuals who are like, you know what? I know how to fix that. I'm great at that. I'm going to be able to make a huge impact here. And so right now, I don't know if everybody's on LinkedIn, but everybody's talking about how perks, everybody needs perks. Perks will not save your company. Perks will not save your company. Culture will save your company. Culture will grow your company. People are not joining you for bagels and all this other stuff. What they all want to do is feel like they will absolutely have an impact on the world. And I can assure you, coming out of COVID and this post-pandemic moment, more than anything, they want a clear vision. So I think that goes all the way back to Yasmin. So I'll leave it there.
Yes.
So, Allison,
Well, thank you.
Allison, I might just interject only because you brought up 1998. I started my career as a journalist for a little magazine that you may have heard of called Fast Company.
Oh my God.
And I was their first employee. And in 1997, Tom Peters wrote an article called The Brand Called You. And it's so funny how it's sort of come full circle to that. And when we look at companies, we look at gaps in talent. And the dirty little secret in private equity is, you try to find these management teams that are really good at what they do, but we're not particularly good at mentoring the people within our own organizations. And what I love about what you said is, you don't hire people, you build teams. And when culture can drive success, in every business I've been involved in, when the management team has that locked arm jive, it's so good.
Okay, so I just got the tingles when you said that. Okay, like that is money. Okay, so we're in financial tips today. Like, okay, the best financial tip we got is your culture, right? Like that is, I mean, like that's it. It's,
not only that, a great culture, people will take less money to join it, right? Like they want to believe so hard. And if you make them believe and you don't let them down when they get there, right? Like that's your stress, right? Like you're the entrepreneur. You're like, okay, I've got to empower my teams. I need to teach everybody how to take, how to evangelize what we've started. And you'll know you're getting it right when you go to say something and your strong number 2, 3, 4, 5, 6 says, I got this, and they take it away. And it's like you could have said it yourself. And you're like, I got it.
Yeah.
Can
I dive in on culture a little bit? Because culture is one of those things that is so amorphous. It's just really hard for people to figure out, like, what does that mean? And, I'm in Silicon Valley, and culture has been a horrible thing in many companies, like horrible. So understanding, I think there's a lot of pressure early on when people kind of say, okay, what are our values going to be? And if you look at value statements, they look the same. Like if they're not true and authentic and coming from people who are actually going to walk the talk, like truly authentic, then they don't last. And I think spending time on your values and spending time understanding like who you are as a founder and what kinds of things you are going to continually illustrate, walk the talk, like what's true to you. That's the only way to make a culture authentic. I do think that there is a whole process there. I love what you're saying, Allison. There's a whole process there, and it is things where people get really tripped up because they think if they just write a mission and they just write some values, their culture is done. And then what happens is if people don't align to those values, the place tears apart because they're not true and they're not authentic. So I would spend time on that up front and make sure they're really like things that you're going to be able to walk the top on, and you're going to be holding other people accountable for those same for walking the talk. And just one last quick thing on purpose and mission. I love what you're saying, Allison. I just got all stirred up. And then, but the other thing that happens is people want to work for something that's going to change the world, or is they're going to have purpose. They're going to want to show up every day. It's not just to recruit them. It's to keep them engaged. Like it's a grind to do a startup. Let's just be clear. This is not a like happy flowers and daisies every day. It's a very hard, and there's really some brutal times that you have to go through. And if you have that sort of North Star there all the time, it's the thing that's going to keep people engaged and showing up even when things feel dark and sinking. So also the other thing is really spending time on that and articulating that well too is really important. I just all like, oh, you're right. I know.
The last thing I want to add is what I tend to tell people is that culture isn't what you write down in your values. It's what you celebrate and what you tolerate. And sometimes you need to be in the organization for a little while before you actually record that. And to your point, like entrepreneurship is high highs, like high, drug high, and low lows. Like,
Low.
are we going to live to see tomorrow as an
Yes.
organization, especially in the beginning? So you need to get through both peaks and valleys, I think, before you start to articulate what's celebrated and tolerated, because your hardest decisions come back to Allison. Like in your partnership, in my VC partnership, the hardest decisions we make is always around talent. You know, it's not really about the, you know, is it a safe, is it a preferred, is it common? It's really like who are we hiring to make these decisions? So I think all of this is really topical. And then I just want to go back to one thing, because we were talking about different types of capital. And what I want to stress is that it's not a zero-sum game. I think founders need to understand what's the right capital for them. And it could be dilutive and it could be non-dilutive, but you need to understand that. And certainly there are pathways that have worse reputations than others. But if you're a high growth technology company, or if you're a biotech company, you need $30 million to get to your next stage, right? And so either you can be honest about whether you need investors or not, but there's like a real next step. So you've got to evaluate that. And the other thing is, the reason why I'm in this business is because I don't want it to just be, you know, awkward guys who dropped out of Stanford and Harvard who can raise money off of an idea. Like we all sit and we're like, yes, let's grind it out together and support each other because we bootstrap. Yes, it's not a zero-sum game, but I don't just want that group to be the type that can get on a trajectory that allows them to exit with untold generational wealth creation. So let's make room for all of us and make sure founders understand alternative financing and what the implications are for all of us.
Well, well
I'll just-
said. Thank you.
I know
Go ahead.
we're like at our hour, but I guess just one last point on the hiring front. I think taking the time and doing broad canvassing for the right employees is important. The mix of having a good, positive mission that actually is transformative plus doing good, I think is even more important these days. It definitely resonates with the new, the new generation. And I think also making the cuts when you need to make them quickly when there's something toxic or something just not working out. I think it's a big mistake people make, that they just wait too long before they sort of move on. And so it's just something else to keep in mind.
Yeah.
Yeah.
Well,
And
I
go
ahead.
ahead. Sorry.
No, go.
Oh, I was just going to say, the other thing, if you already have a team, this is very important for right now, is, don't, protect your stars right now. I would say it's a really important time to sort of have those conversations and think about, if so-and-so left, would that hurt? And that, because it's much cheaper for you to keep somebody who's doing amazing by making them feel valued and welcomed, and it's hard when you're growing and super busy, but always keep that in mind. Am I protecting my stars as we grow? Because, yes, you can cut the wrong person, or cut the person that you hired wrong early. That's a great tip, but don't forget about the people that are actually making the donuts and who are great, because that one person, I always say to my clients, I don't want you to have to call me to have to replace this person with 3 people. This person is worth 3 people. So keep that in mind. That's a way to save some money.
That's
Yeah.
right.
Yeah. So we're hitting, we're up against our a little over 3 o'clock. So I hate that these have to come to an end, but I did want to bring in our CEO and our CFO just for like just final comments, and for whoever's left in our attendee audience to meet Cecilia. Blank and Corrine Chrysler. So if you guys can unmute yourselves and thank the panelists, and I thank you for being two amazing women who had the vision to move forward with Netcapital. So so Corrine, Cecilia, are you there?
Sure, I'll go first. Thank you all. I love how interactive this panel discussion was. It was really great to hear you, comment on each other's ideas. It was really fabulous. As the CFO of a public company, of course, Diane's comments about rule number 1 is to not run out of money. That really resonated with me very highly. And as someone who works with entrepreneurs to help them raise money, something else that resonated with me is that, raising money is really a sales pitch, that was really, really important. And that's something that a lot of people don't realize and don't understand the importance of. So really make sure you're clear on what the market opportunity is and your business model. How are you going to make money, and really be able to position your company well and what your competitive advantages are. You really need to be able to say that really clearly and succinctly. Allison, the power of the team is so important when we're raising money for our clients. That's one of the first things people look at. And if you have a really powerful team, and especially a team led by someone who can really, really sell themselves and their business, it's really a win-win situation. So thank you all. This was really, really wonderful.
Thanks, Corrine. Cecilia?
Today was so impressive, and thank you, all of you. I feel like I learned a ton of stuff that I wish I knew years ago. It was so practical, so much of the time we hear little snippets of wisdom, like the one Yasmin started with, which was, max out your credit cards. And when you really think about it, that's fine if you end up being a phenomenal success. It's really not fine if maybe it takes you longer to be a success, or that first business doesn't quite make it. So I think the level of practicality here was so good and so helpful for people who want to be part of this. And I also I can't agree with everything everyone has said about building the right team, thinking about how you all want to work together, the culture. Every day I think about, how do you put together, especially this last year, how do you put together a team that believes in each other, trusts each other, and really wants to make a success out of the business. And to me, that's a really important step for any business to look at. So I thank you so much. I could go on for another couple of hours. And I hopefully we'll do it again someday. This has been very helpful. Thank you.
Thank everybody. And it was just beautiful. I'm going to put us on the gallery view for whoever's left. And thank you to the attendees. And I know we're all going to be in touch. Good to see everybody, and have a great afternoon. Bye.
Thank you.
Welcome. Bye.